Things are getting really, really juicy and interesting by the minute in this whole AMC play. Now, I'm going to share with you in this video a new information, a new research that actually popped. All right. Somebody discovered it and it changed a lot of things into how quick or how, let's just say realistic. Yeah. How realistic AMC can reach $100,000 a share, and how big is the insurance money that the Fed can use to save the financial system in case we reach to that $100,000 a share. Please, it's a little bit like, I'm going to be fast, but please just stay with me and focus. All right. So let's get into it. In 2008, when pretty much all the banks were dying based on the subprime crisis, the Federal Reserve jumped in and they helped the financial institutions either by lending money or by purchasing, assets like they've been doing in 2020. That was around $7.7 trillion. And I know people have been using the insurance money that the Fed can use in order to bail out Wall Street hedge funds that are short selling AMC stock to oblivion. So let's just get into this detail before we actually talk about that as well. So this paper is actually the research that I was talking about, and it's coming from the Levy Economics Institute of Bard College. This is a non-profit, non-partisan public policy think tank founded through the generous support of Bard College trustee Leon Levy. So there have been a number of estimates of the total amount of funding provided by the Federal Reserve to bail out the financial system. That was back in that is in general, not back in 2008. Bloomberg recently claimed that the cumulative commitment by the Fed, this includes asset purchases plus lending, is around $7.8 trillion. That is $7,000 billion. But as they were doing this work, they actually found out that by these two men, Nicola Matthews and James Felkerson, have undertaken an examination of the data on the Fed's bailout of the financial system. This is the most comprehensive investigation of the raw data to date. So it's a no joke. It's really up to the point. All right. So bottom line is this paper, this research that they did, concludes with a summary of the scope and magnitude of the Fed's ability to respond to another financial crisis. It's a Federal Reserve bailout commitment. It's in excess of $29 trillion, but not $7.8 trillion. Still with me? Please stay with me for a second. So going back to this post, we know that the Fed printed or could print up to $29 trillion. $29 trillion to financial institutions around the world just to keep the system running. All right. We are all fighting here in AMC stock just to get $1,000 a share. All right. That's kind of a psychological level, not meaning that it's not going to go up or cannot go up. All right. And that will ultimately link, to people maybe not thinking that $100,000 a share is not possible. But this new research proves that, hey, we can really make it a reality having AMC at $100,000 a share. This is what this research actually tells us. I will put the link in the description of the video down below. Please feel free to actually go ahead and disclose it discover it on your own. Going back to this whole play, we know that at $1,000 a share, all right, we have about 500 million shares that exist out there. Those are the shares that the company issued, and anything else is just synthetics, faked, naked shorts. So fake shares in general. Now, let's do this. Let's just say we have about 500 million shares, all right? 1, 2, 3, 500 million shares out there. At $1,000 a share, we are looking at $500 billion company for AMC. All right. Now, if we increase to 10,000, let's just multiply by 10. At 10,000 a share, we're talking about $5 trillion. That is $5,000 billion company or market value. All right. Now, if we multiply this again by 10 to increase it to 100K, we're actually looking at $51 trillion. That is 5 exponential 13. 50 trillion dollars. Now at $50 trillion, It doesn't necessarily mean that the Fed is going to actually have to expense or take out $50 trillion. It literally means that we have to subtract the own insurance from these own companies, what money that they have on hands, liquidation coming from assets like buildings, like real estate, like, bonds or any other asset they can have in order to help them pay the bill, because this is the bottom line. This has the potential of bringing the financial system down. That's why Lou says bunch of companies like brokerage firms can be vaporized. Why? Because you have companies like Citadel that are pretty much the monopolists around pension funds, 401ks, IRAs, literally vehicles, investment vehicles that pretty much all Americans investing in the stock market have their money into. All right. So the problem with that is these companies shorted the stock, shorted the market back in 2020. It made sense then, but it doesn't make sense now because we are way past that period. All right. But because they got squeezed, they went out of their way to make sure it doesn't get out, to make sure they didn't pay the bill, because the bill is pretty hefty. The bill is pretty huge. So in order for them to pay the bill, if they don't do it the right way, and when they do it, it has the potential of bringing down all the money that all Americans have invested into the stock market for the last 30, 40, 50, and even 60 years. So the Federal Reserve and the government cannot just let that happen. That's why at some point, if AMC price hits past the thousands, personally, I'm expecting the Feds to step in. Like, you know what? Party is over. Let's just manage this whole thing and make sure that every matter is settled. That's what I'm thinking. I may be wrong because nobody knows. Nobody can guarantee what will happen then. But that's why I think it's also very interesting and worthwhile looking into this research, seeing that the Fed actually has more money than we think into bailing those companies out by preventing the chaos from happening on Wall Street, because they have much more money to do that we thought. So the whole deal here is, are you going to hold enough or long enough to see $100,000 per share? Because if I hold 10,000 shares, at 10,000 a share, I'm already a multi-millionaire. I don't need to be a billionaire to have a happy life financially. So personally, that's not even the point. The point is, who will be able to sell you those shares at 100,000 if people start leaving the ship? And that was my point about your size position, your financial situation personally, and your entire household situation as well. So yeah, it's true that we can hold all to a certain level, but $100,000 a share, even if the Fed has the potential to bailing out those companies and making sure we get that money, I don't know, man. You tell me.